Hi there, welcome to Nepi Invest. About 1 year ago, from when I'm recording this video, I did my initial video on a company called Credit Clear. And I titled that video September Quarter Inflection Point? Question mark. And that was the most important part of the title, that question mark. So I wasn't saying this was an inflection point for Credit Clear, but the company had become operating cash flow positive, and that can be an inflection point for a company. But typically, if a company does record an operating cash flow positive quarter, potentially for the very first time, I prefer to see the company hit a little bit more scale, increase the operating cash flow, become free cash flow, become profitable. So in today's video, we're going to see how this company has performed over the past year. Did this company hit that important inflection point 1 year ago, and has the share price shot up and moved into an uptrend? Now, just a few facts in regards to Credit Clear. I'll talk a bit more about what this company does in the next slide, but I'd probably call this company a repay technology company or receivables management solutions company. So this company deals with the debt of a company or the debt due to a company, and that will become a little more clear in the next slide. Company founded in 2015, listed on the ASX in October 2020, when many companies decided to list on the ASX because the market was in a significant bull market at that point in time. And you will see a significant increase in IPOs when we're in a bull market. The CEO is Andrew Smith, and he owns 6% of the company. And the largest shareholder of Credit Clear is Thorney Investments, with 11.3% holding. Now, last time I did a video on this company, the market cap of Credit Clear was 163 million. So it's a share price of 44.5 cents. Now the market cap of this company is 74 million. So the valuation of this company has more than halved in the past year. So this company did not hit that inflection point 1 year ago, because if it had, the market cap would not have more than halved. I'll talk about that a little bit more during the rest of this video. And the ticker code of Credit Clear is CCR. Now, a little bit more about what Credit Clear does. And I love this particular slide, or this particular page that was found in Credit Clear's quarterly presentation, because this says what they do way better than what I could say to you without any sort of diagrams. So this is their revenue model. A client appoints Credit Clear. Credit Clear and client establish a two-way data exchange. Client sends data file of overdue accounts to Credit Clear. Credit Clear engages clients' customers to resolve accounts payable. Credit Clear receives a commission and or fee for account. So it's very important to note that Credit Clear does not buy debt. That's like Credit Corp, companies like that. This is the stage before Credit Corp buys debt. So the clients, or the Credit Clear clients, have these accounts receivable, and the customer is not paying the debt due to Credit Clear's clients, and then they engage in Credit Clear to engage in the customer who owes money to Credit Clear's clients. And hopefully this engagement is successful, and Credit Clear's customer receives, or client receives, money from their customer that's due to them, and that's where Credit Clear receives a commission or a fee. And I hope that's all clear. Maybe sometimes I think I know what I'm saying. I think it's clear to myself, but it may not be clear or critically to everyone else. Now, before I have a look at the September quarter results for financial year 24, let's go back 1 year ago to the quarter results that gave me the inspiration to do a video on this company, and why I said, was this inflection point for the company? Because 1 year ago, this company had $8.8 million of receipts, but more importantly, the company was operating cash flow positive by $531,000. Now, cash on hand fell a little bit to $10 million, but more importantly, cash receipts up 4.8 million from the previous year, and staff costs and administration costs only up 3.5 million. So the company did find a little bit of scale between September quarter financial year 22 to this particular quarter. So that's one of the reasons why I was thinking maybe this was the inflection point for the company. But as we move and look at September quarter results for financial year 24, even though cash receipts have continued to grow, up 1.8 million to 10.7 million, unfortunately, the company's spending, particularly in administrations, have increased at the same rate or even at a greater rate than the receipts. Staff costs up 250,000, administration costs up 1.7 million. So in fact, even though the company is still operating cash flow positive, that operating cash flow positiveness is actually down from last year. Now, in saying that, cash on hand has increased up to 12.2 million. So that is a good point in regards to this company's financial or their quarterly results, that the company has increased in cash on hand. So even though this company is close to hitting that inflection point, I don't think they're quite there just yet. And it seems like the market might agree with me. And the reason I say that is when we look at the charts, you'll notice there is no rush from the market to buy shares in this company just yet. One thing I look at for all companies that release quarterly results is cash receipts. More particularly, what I'm looking for is cash receipts growing through time. And that is evidently clear that cash receipts are growing through time for this company. In fact, they've increased from 2.2 million in the December quarter 2021, financial year 2021, to $10.7 million in the most recent quarter. So a nice increase in receipts. The one thing I notice here is we did see, or this company did see, a rapid growth in receipts from the March quarter 2022 to the June quarter. In fact, receipts almost doubled. And I'm just wondering if that was because of an acquisition. Because then all of a sudden, after the June quarter 2022, receipts went nowhere. They just went sideways. And then all of a sudden, we've seen another significant increase in receipts, a $2.4 million increase in receipts. That could be because of the payment schedules. Maybe this was a favorable payment schedule for the company, and maybe the receipts will drop next quarter, or maybe it's because of an acquisition. That sort of jump in receipts back in 2022, usually you see that when a company acquires another company. That's a sudden, rapid increase in receipts. So if I was doing further research on this company, I'd like to verify that this company did have a major acquisition in 2022, and that's why there was that increase in receipts. Also, I'd like to note if there was any sort of acquisitions in the past year that could explain the $2.4 million increase in receipts in the most recent quarter. Now to the charts, and this is actually the company's weekly chart going back to when they listed on the ASX in late 2020. And there was a little bit of interest in this company. In fact, in that first week, when this company listed, that was when we saw the share price high of this company got up to $1.20. In fact, that was a volatile week. Share price was opened at 48 cents, was as low as 40 cents, went to a high of $1.20 and closed at around about 90 cents. So a really volatile week in that first week. And ever since then, the share price has been dropping, a well-defined downtrend. And this is why the market is not quite convinced that this company has hit that inflection point. And if the market was convinced that this company had hit that inflection point, you'd see the share price starting to go up. And we're not seeing that just yet. You're also seeing increasing volume, and we aren't seeing that just yet. So we can be patient. In my opinion, we can be patient with this company. Just wait for more signals, better signals, high quality signals that this company has hit that inflection point, that this company is profitable on a continuing basis, that this company is operating cash flow and free cash flow positive on a continuing basis as well. That's all I have for this look at Credit Clear September quarter results for financial year 24. 1 year ago, I asked the question, had the company hit an inflection point? And obviously, with the share price and valuation on this company more than halving since then, obviously that inflection point was not reached. So I'm asking the same question right now. Has the company hit the inflection point? Or maybe better yet, can the company hit that inflection point within the next year? And if they can, maybe the bottom has been reached. If not, maybe the share price will continue to fall from here. It could halve further from here, and the market cap or the valuation of this company could get as low as, say, 30 million or 20 million or 10 million. Who knows? That's why inflection points are really important. That's why profitability is important. That's why operating cash flow and free cash flow positiveness is really important as well. So if you have any thoughts about this company, maybe you're a shareholder of Credit Clear and you'd like to explain why you're a shareholder. Maybe you're really bullish on this company moving forward. Love to hear your thoughts. So leave those thoughts in the comment section of this video. Otherwise, I am not a financial advisor. If you do need financial advice, make sure you seek out someone who's qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.